Hello everybody, welcome to the December 17th, 2021 version of News from the Front Lines of Business by DW Huff Consulting, where we help you know your numbers. Okay, so here we are, December 17th, middle of the month, also the end of the year. It's really flying by here. So anyway, fun with the numbers. Sorry for its small size here, but 8-7. So here we are, 8 days away from Christmas, which I guess is really seven shopping days away from Christmas. So whatever you got to get done between now and the 24th, at the shopping malls, whatever, the clock's ticking. And, I'm not a fan of Christmas per se, but that's my fun number for the week. So with that, we'll jump into the news from the front lines. A couple discussions we've had with clients. So we do a decent amount of consulting here on the real estate markets and the corporate tax and things like that. But as we've seen the prices of the current real estate market. So at the last couple of times we talked about how just over priced things were, and people were questioning, can this continue for a long time? And this is a chart from a service that we use called from Altos Research, and I just ran it for the Chalmette area here. And we see that some of the indications here are that things are kind of getting closer to normal. So that 47 rating you see there on the seller's market graph on the left-hand side, kind of close to the middle. So it's not like it's overcooked like it was a few months ago. But we also see on the list on side some other indications here where we have a number of properties being relisted. Having price decreases, and that was definitely not the case a few months ago. Everything was going up and up and up. So things, at least here, are looking, I guess, somewhat normal, and maybe there's going to be some kind of reversion to the mean. And we look at our 90-day average here. So this is the median listing price in our area, and we can see how when you go back to the far left-hand part of the graph at December 2018, the median price was somewhere around 225-ish. And now it's sitting more like 275, but it's kind of seems to have kind of flattened out a little bit. So notice there's an upward slope to that line from starting back in the latter part of 2020, going all the way through the current year. But now it seems to be flattening out and getting to be kind of more normal. So just keep that in mind as you're making your decisions going forward as far as purchases go. Now things are getting a little bit more normal. So if you were kind of holding off on making any kind of moves because of just the craziness of the prices, it looks like if you hang in there a little bit more, a little bit longer, things are getting back to normal. So interesting. Also, corporate tax observation. So we had a big discussion with a client who was an S corporation. So that's very common. Taxation rules here for small business because it's a pass-through type entity. So if you don't know S corporation, what happens there is you run your business selling whatever it is, and you have all the protections of a corporation as far as liability and that sort of thing goes, but you don't get double tax. So the corporation pays no tax under that scenario, and it flows through to the owners what they reported at their personal tax rates. Historically, that's been a good deal because it avoids this double taxation. But I'll throw out some factors here that can change that. Number one, the corporate tax rate right now is a flat 21%, which is low. And historically, it's been as high as 39%. So it changes in a similar manner to the individual tax rates. However, the current rate's low, and right now the Build Back Better Act here, assuming that passes, it's going to change things up a little bit. So instead of a flat rate, some portion of income will be taxed at 18%. The majority will still be taxed at 21%, but the higher income corporations will move up into that 26% bracket. So one thing to keep in mind, of course we hope the flat rate stays in place, but we don't know that to be the case. So keep that in mind for planning. But the reason why I bring this up here is that we notice the difference between the corporate rate at 21 and the individual at 37. So consider the case of your S corporation, right? So we talked, let's say we got a $500,000 profit on the S corporation. The top rate at 37%. That's where this taxpayer would likely end up, versus 21% if he was a corporation. So there's some opportunity here, because the C corporation, it would take that tax at 21%, but if that owner doesn't need to take the money out of the company, it stays there until he takes it out at some point in the future as a dividend, at which point it's taxed at 15%. So in total, I guess if you look at it compared to the top rates as they are now, yes, the rates are very similar. However, the timing of the tax is something that you can play with, and if that dividend comes out at some future tax year where you're not having a high earning year, those could be actually going down to zero, because there are some situations where dividends get a 0% tax rate. So the timing of when you take it out is now more in your control as compared to the S corporation, and there's some planning opportunities there. So the qualified dividends are a nice thing. Additionally, what you'll see is some companies will leave money inside the company and lend it out. So there is you got to be careful of the rules there, but there are some scenarios where a corporation can lend money back to the shareholders in some situations, and it's not taxable income, it's a loan, and you pay back the loan, and you kind of structure it the right way. But there's a way to kind of access the money without having it hit your taxable income right away. So some opportunities, and as long as these tax rates stay the same, even with the Build Back Better Act, I think a majority of the smaller C corporations are still going to find themselves somewhere around 21%. So this planning opportunity still exists. So that knee-jerk kind of default reaction where a lot of accountants just come in and automatically start filling out the paperwork to make the elections to be an S corporation, that's not always the best way to handle these sort of things. So it's just food for thought here, and that double taxation that we always try to avoid. Depending on what the corporate tax rate is, that double taxation is not always that bad. So keep that in mind. That was a discussion that we had later this week, and in this client's case, the C corporation made a lot more sense than an S corporation. So we've had to make some changes there. Year-end accounting. So the usual stuff. In general, this is the time of year where you try to defer some revenue if you can. So if you have some work that was done and you're sitting down doing some invoices, if you seems like you're going to be in a potentially a higher tax bracket, you might want to hold off on sending out those bills, because it's revenue when it's recognized there. So holding off on billing could reduce some of your top line numbers. We also want to look at accelerating any expenses. So if you got some things you're going to be needing earlier in 2022, you can put those expenses into 2021 and get the deduction now if you need the write-offs, and kind of hope for the best with tax law changes. So we mentioned, the Build Back Better Act is still kind of not quite finished yet. It's in the last stages of things, but there's a potential that it passes in early part of next year, and some of the provisions might be retroactive. For the most part, what we've seen, it's not terrible. I mean, the spending side of things is probably another discussion, but the tax side of things, it's going to hurt everybody, I think, to some extent. There's no way to, I guess, get around increasing taxes at this point in the game, but at least the current revision didn't seem too catastrophic, so we'll kind of keep our fingers crossed there. So that's the gist of it. But if you need more details on planning, we do have a lot more that can be discussed if you reach out to us, because those are some kind of general rules. So with that, my closing thought: happy Krampus time. I don't like the commercialism of Christmas, but Merry Christmas if that's what you really like, or Happy Holidays. I saw this discussion today with some meme on social media, and they were talking about just making this adamant point of saying Merry Christmas. And I'm kind of more of the opinion that happy whatever you like this time of year, really. If it's Christmas, Krampus, something else, my thoughts are goodwill to everyone, and have a good holiday, and let's get ready for 2022, and hopefully it's not as crazy as 2021. So with that, have a great weekend, and we'll see you next week. Even though it's Christmas week, we'll probably still post something up here, so stay tuned. But if we don't, we'll see you after Christmas. So have a good weekend.